Somewhere in this Western Sydney backyard is Scott Hink's swimming pool.
So back in the last floods in 2022, the water came up from the easement, crossed the pool and went straight up to probably about just half a metre underneath the actual brickwork of the house.
Right, okay, so it didn't get into the house, just covered your garden.
Didn't get into the house, covered the garden, the patio area, ruined the retaining walls, covered the pool.
This was the fourth flood in 18 months that lapped against his home, and that was too close for his insurers. 3 years ago, he paid $1,216 for home and contents insurance. Now, after a bit of online searching, he's found a couple of companies which will cover him at mind-boggling prices. $31,969.37, with a $51 discount if he pays it all up front.
Who can afford that? You can't afford that. Not the average Australian who gets up in the morning, goes to work and comes home is not going to be able to look at insurance premiums of $30,000+.
Most companies won't cover him at all, and that terrifies him.
You lose probably 50% of your saliva and your heartbeat goes up to Iron Man type levels. You think about your family, you think about your livelihood, but you've got to really think about the castle, which houses all that.
Scott Hink's experience is echoed along Australia's east coast, from the riskiest suburbs of big cities like Sydney and Brisbane to towns like Lismore and Mullumbimby.
But we know that people who live in very high-risk areas, particularly flood areas, are seeing their premiums climb dramatically, and we're seeing underinsurance in those areas.
Look, I'll underinsure. I will say it's cheaper to build my property. I will say that I have less contents than I really do. I will underinsure the property to keep insurance on the property.
With the high view over Australia's insurance market, Sharonjit Padam is placed better than just about anyone to explain why insurance has become so expensive. He's co-authored a report for the Actuaries Institute, which found premiums around the nation have risen 28% in 1 year.
14% of that, or half of it, is due, we think, to buildings cost inflation. It costs a lot more to fix a house now because of how much those increases have been, and that gets pushed through to insurance claims when they have to rebuild the house, and that comes through as higher premium costs.
Another factor is the cost of reinsurance. That's insurance for the insurance companies. With back-to-back years of expensive natural disasters, like the floods and the 2020 Canberra hailstorm, Australia has become a losing bet for underwriters.
Statistics point to reinsurers losing money in the last 5 out of 6 years. So they then are increasing their reinsurance costs, trying to get back on a basis where they're at least making some money out of this. Most insurers will try to pass that reinsurance cost down to whoever's causing that risk.
The greatest risk of all is in the sprawl of Australia's biggest city.
Unless we do something about Western Sydney, it remains our largest exposed flood community in Australia. There's around about 300,000 people that live in harm's way in Western Sydney, that if a major flood event occurred there would cause a major displacement problem in Sydney.
Insurers are anticipating that crisis, so premiums have increased sharply even for homes that haven't flooded in a century, like Warren and Carol Goldsworthy's Timber Cottage. It's in flood-prone Windsor, but high enough up a small hill that last year's waters peaked at their neighbour's house.
When the SES knocks on the door and says you better start to prepare to evacuate, that makes you a bit nervous and think, what should you take, what shouldn't you take?
Their premium has jumped from $3,800 a year to $6,500.
It gives you a bit of a hit because, you know, when you're earning money, your money's going up, but when you're semi-retired or retired, you're just covering costs and keeping level. but your running costs are still going up, it's really difficult at our age.
Sharonjit Padam estimates that for about 1.25 million households, home and contents insurance premiums are equivalent to 1 month's annual household income.
If your insurance is going to cost you more than a month worth of your gross household income, then we think it's very unlikely you're buying insurance.
There is no data available on the number of uninsured homes.
We don't know exactly how many people are pulling out in particular areas, but we do know, talking to those communities that are just recovering from the floods, that insurance pricing now, because of those flood events, has dramatically risen, and that is putting a lot of pressure on some people to be able to maintain their policy.
And if you're uninsured, you've got problems long before the rain starts.
If you can't buy insurance, you can't get a loan for your house. And if you've got a small business that you're running based on a loan from the bank secured against your house, then you're also going to be in trouble. So this is nearly 1 in 8 households not being able to afford insurance is a bigger problem than just insurance.
Robin Preston's constituency on the Nepean River floodplain faces a crisis.
They would just like a clear path to be able to get insurance that's reasonable. Some of our people here are paying for residential insurance up to $20,000 a year in premiums, and they walk away from that. They just can't do that.
As insurance becomes out of reach, the New South Wales MP thinks a solution is some kind of capped emergency cover.
Perhaps a one-off payment of a figure that would allow people to come back into their house after the floods have occurred, and that they can actually do a clean-up, pull out everything and then start again. So maybe a figure, perhaps $15,000, $20,000.
The alternative is no cover at all. That's not recommended by those who've lived through these wet years. It's one of the reasons Scott Hinks won't move out.
I don't want to sell. We really enjoy this area. It's a great area. But you can't, it's like if you had an old car and you knew it had problems and you just sold it to the quickest person that came along and you thought, well, if they get 500 kilometres out of it, happy days. I wouldn't like to see a young family moving to this house and then go through the torment that we and other people within the area have had to endure.